The votes are counted. The headlines are loud. Markets are moving. But here's the real question. No one is answering clearly. What happens to your money after the 2026 election? Your rent, your groceries, your job, your investments. Every election reshapes the economy, but not in the way most people think. Tonight, we break down what actually changes, what usually doesn't, and how the winner's policies could hit your wallet in the months and years ahead. Every election feels historic. Every result feels like a turning point. But the US economy doesn't just flip overnight. It reacts slowly, unevenly, and often unpredictably. In this documentary, we're stepping away from politics and focusing on outcomes. Elections historically affect inflation, jobs, taxes, housing, interest rates, and the stock market. No party slogans. No predictions. Just economic reality, explained clearly, so you can make smarter decisions with your money after the 2026 election. The first thing to understand is this. Presidents and Congress influence the economy, but they don't control it. The economy is a massive, complex system shaped by long-term forces: global trade, technology, demographics, energy prices, and most importantly, consumer behavior. Elections matter because they influence policy direction, not because they instantly change prices or paychecks. Markets often react to uncertainty before elections and stabilize afterward. What happens next depends less on who won and more on what policies can actually pass. Immediately after an election, financial markets respond to clarity. Investors hate uncertainty. Once the outcome is known, stocks often stabilize, even if they initially dip or spike. The dollar bond yields and oil prices react to expectations about future spending, taxes, and regulation. For everyday Americans, this period can feel confusing. News headlines swing wildly, but historically, short-term volatility doesn't equal long-term economic damage. The smart move is to ignore the noise and focus on the bigger picture. Now let's talk about inflation, the issue Americans feel most directly. After an election, inflation trends depend on government spending, supply chains, energy policy, and Federal Reserve decisions. Here's a key point. Presidents don't set interest rates. The Fed does. If inflation remains high, the Fed may keep rates elevated regardless of politics. If inflation cools, borrowing becomes cheaper. Your grocery bill, gas prices, and rent respond more to global supply and demand than to campaign promises. So, what about those interest rates? They affect your mortgage, car loans, credit cards, and student debt. After elections, Americans often expect immediate rate cuts or hikes, but the Federal Reserve moves slowly and deliberately. What matters most to them is hard data, like inflation figures and employment numbers. If rates stay high, debt becomes more expensive, but your savings accounts might earn more. If rates fall, borrowing becomes easier, but prices may rise again. Either way, managing your household debt becomes absolutely critical in the post-election economy. What about jobs and wages? Employment trends usually lag behind elections by months or even years. Policies around infrastructure, manufacturing, healthcare, and technology can influence job creation, but businesses ultimately hire based on demand, not politics. And let's be real, automation and AI are continuing to reshape the labor market regardless of who's in office. Wage growth depends more on productivity and worker shortages than on election outcomes. The biggest risks for workers are political change it, failing to adapt to the economic shifts that are already underway. Taxes are one of the clearest ways elections affect our wallets, but changes take time. Any new tax laws have to pass through Congress, survive tough negotiations, and are then implemented gradually. For most Americans, tax changes after elections are usually modest, not dramatic. The real impact often shows up in things like tax credits, deductions, and business incentives rather than those big headline rates. Understanding how tax policy affects your savings, retirement, and investments matters a lot more than the political debates. Now, the stock market. Contrary to popular belief, the stock market has historically grown under multiple political parties. Markets care about company earnings, innovation, and global growth. Yes, short-term reactions happen after elections, but long-term performance always comes back to fundamentals. Investors who panic sell after political news often miss the recovery that follows. The strongest defense for your retirement accounts and long-term investments isn't picking the right party, it's diversification. Let's look at housing. Affordability remains a major issue after the 2026 election. But interest rates, housing supply, local zoning laws, and construction costs matter far more than election results alone. Rent prices respond to local demand, not federal speeches. If you're looking to buy a home, you should focus on your personal timing, your budget, and long-term affordability, not on political cycles. The cost of living will keep rising in some areas and stabilizing in others, driven by migration patterns and local job markets. So, what does history tell us? Looking back at past elections, one pattern is crystal clear. The economy rarely collapses or booms solely because of an election. Economic cycles continue. Recessions and recoveries follow broader, more powerful trends. The biggest financial mistakes people make happen when they overreact emotionally to political outcomes, instead of focusing on their own financial fundamentals. Those who plan, save, and invest consistently tend to do better in the long run, regardless of who wins. The 2026 election will shape policy debates, but your financial future ultimately depends on your choices. Things like budgeting, reducing high interest, debt, building an emergency savings fund, and investing for the long term. These strategies matter more than any election result. The economy will keep moving. Prices will rise and fall. Markets will fluctuate. But informed Americans who focus on preparation over panic are the ones best positioned to protect their wallets. In the years ahead, the election is over. The economy continues, and the smartest move now is understanding how it really works. Thanks for watching, and be sure to subscribe for more insights to help you navigate your financial world.